Hey guys, this is Chris Mincola with the Mincola Group over at West USA Realty, and I wanted to give you your weekly market update. Hope you're all doing well. Had a great Mother's Day and all that. We missed last week. We had some family business to tend to, and of course, I hope everybody had a great weekend and Mother's Day. So happy Mother's Day again to all of you. So we're going to start with some national news really quick, and then kind of go into and drill down into our local market here in the Phoenix area like we always do. But the Fed's biggest thing with going on right now nationally that affects everybody is interest rates going up 50 basis points. That's going to affect obviously affect people's payments and what they can afford, and the affordability is going to be a big factor in the demand. Supply and demand is always the name of the game, right? Which we always talk about. So that 50 basis points is the biggest increase since the year 2000 that we've seen from the Feds. And, you know, in the last 15 weeks, we've seen a huge and a big difference in affordability, not only in price increases, but in the interest rate, right? Going back 15 weeks, we were around 3%-ish. Now we're around 5 or a little higher. Back in December of 2021, we were right around 3.11. And now we're at about 5.27, depending on the day and the hour and the week that we're in. But that's the highest since 2009 as far as the interest rates go. So an example of the difference in payment here would be this. If you were at let's say $500,000 mortgage and you're at 3.11% interest rate, your payment would be about $21.38. Well, if we were looking at 5.27, now your payment is going to be $27.67 for a difference of $629 a month in a mortgage payment. Big difference. That's just the interest rate increases, not the increases obviously in the home prices. So when you look at affordability nationally, this affects everybody the same way with the interest rates. And when you look at the affordability index, so to speak, or your payment to income ratio, and how much you can afford, you know, median home prices and income, you know, for each person, we look at 2007 to 2009, the affordability index was at 34.1. Okay, that was the record. Okay, and April of this year, we hit 32.5. So we were at the average of 34.1, and now we're at 32.5. So it really, you know, makes a big difference, obviously, on where our interest rates are at. We're still historically low comparably, you know, to where we would have been in the past, you know, where we were at like, you know, 10-12% interest rates in the past. But it is obviously affecting affordability and what people can buy and how much demand we're going to have. So that's going to change things a little bit and shift things a little bit in the market. And also we're seeing some other things happen, which I'll get to in a second, like increase in supply. So, you know, the mortgage rates going up, that's going to affect a lot of things here. And we're always talking about that supply and demand is always going to drive everything, right? Always remember that, supply and demand. So, you know, if they're saying if interest rates were to go up another 0.5%, or if home prices go up 5% more, that'll equal the worst levels of on record for affordability. So if interest rates go up another 0.5%, or where current levels are right now, median home prices, if interest rates go up another 0.5%, or home prices on average, or the median home price in America goes up another 5%, it will equal the worst level record of affordability right now with the, you know, average and median incomes. Okay, so let's look at the Crawford Market Index. The Crawford Market Index gives us something to look at every week and kind of gauge things and where they're going to be at. So anywhere between 90 to 110 is you're going to be your balanced market on the gauges. At, you know, 100 is kind of right smack dab in the middle. If you're below 90, you're in a buyer's market. If you're over 110, you're in a seller's market. Now, last week we were at 383.3. Earlier this year, we were in the high fours, even up near 5. So it's been dropping about 18% on average per month, or 18 points per month on average. And we see that this week we're actually down in the latest, down to 366.3 week over week. Okay. That's 366.3 on the CMI. Yeah. So it's something to watch. And part of that, again, is an influx in supply. We had a big change in supply. Before that, we had a change month over month of 15%. But a lot of this is shifting the market a bit. So we are looking at an active listing increase of 27%. And then we have this, prices keep going up, and then we have the interest rates going up. So the demand is now at 101, and the supply index is at 27.6, which is a pretty big jump. So we're around 10,000 active listings at the moment. Whereas in the past, we've been maybe between 4 to 6, 5, 6, maybe. So we've gone up about 27% in the last 4 weeks. Okay. And so some of the biggest changes we've seen since April of 2005. Okay. So some big changes there, guys. Some of the cities where we haven't seen much change would be Glendale and Goodyear. And then some of the biggest drops in the CMI would be Paradise Valley, Queen Creek, and Buckeye would be the biggest drops. So just to kind of give you more of an idea here on what this looks like, we have 28 days on market still. Our average our average sales price is $596,000. So that's, that's definitely been going up considerably, consistently. And, our luxury market used to be 500,000. Our list to sales price ratio is still at about 102 and some change. So that means whatever the price is being listed at, they're still selling on average for over 2% over. But here's some of the things to kind of drill down even more into this on the supply and the price points. And what we've been seeing on the supply increases in the price point. So under 400,000, we've seen an increase of only 1%, under $400,000 homes. Between 400,000 and 500,000, a 28% increase. From 500 to 600,000, a 50% increase. Okay, so that's quite a bit. But if we go up from there, from 600 to 800,000, we see a 41% increase. 800 to $1 million, 38% increase. 1 million to 1.5 million, a 36% increase. 1.5 to 2, we're up 86%. And from 2 to 3 million, we're up 68%. Over 3 million, we're up in supply of we're up to 9%. So quite a big jump there, guys, to our supply in every category except for under 400,000. I know a lot of people maybe are hoping that those prices would increase or the supply would increase there, but unfortunately it hasn't. So just some things to keep in mind for you also would be that the Phoenix area has on the Case-Shiller home index, as far as month over month, year over year, we've dropped from 7, ranking number 7 in increases of appreciation, from 7 to 10. But that's still a 2.24% increase month over month. So still really strong there. And we are still ranked number 1 year over year. Okay. And for the last 33 months in a row overall, because our last year was 32.9% increase in appreciation. And the average for the country is 19.8%. Also, we see a new permit increase, and the most since 2006. We see 3,841. That's 3,841 new home permits coming out. So that's a big jump there, guys, as far as our new builds coming in strong. But keep in mind, with those 10,000 listings, in order to really get us to a balanced market, we would really need to have more in the neighborhood of about 20,000 listings, active listings at the moment. And we're just not quite there yet. We're quite a ways, from there yet. We're about 50% away from there yet, or half of that. So as I mentioned a couple of weeks ago, our demand would have to, we'd have to see basically a doubling in our demand and our supply in order for it to be more of a balanced market, where we're in that between that 90 to 110 or 100 range on the CMI. But we are seeing more demand and less demand and more supply. So we will start seeing maybe more of a stabilizing environment or more of a balanced market if we keep going in this direction. Not to say that I have a crystal ball and know exactly where it's going to go, but it might be, a time to consider, a sale at this point. And for those who are looking at buying, we're still seeing, multiple offer situations out there as far as our day-to-day operations and all that, but it's not quite as maybe strong as it was before. So instead of seeing, 10 or 20 offers on a property or 30 offers on a property and homes going for 80,000 over asking, we may be seeing homes going for 20, 30, 40,000 over asking, maybe 50, and we may be seeing 3 to 5 or 8 offers on a property. So some of it may depend on area a little bit, as we always discuss. So guys, if you have any other questions, want to know more about your area, if this is a good time to sell for you, maybe it's time to go ahead and do that, maybe move on, maybe you're first time home buyer, or you weren't going to sell or weren't going to move because of the competition and all that, maybe time to maybe look at that, maybe before interest rates go up further. And especially if you're equity rich, like most people these days, if you own a home, might be a good time to look at that. If you have enough to put down, even if you're a first-time home buyer, maybe you can play around a little bit with getting into a situation where you're able to cover appraisal gaps. Well, that's something we can talk about. And loan contingency waivers are something that can also make you more competitive. And, those sorts of things we can talk more about, kind of drill down on, get you a, comparative market analysis for your area. Let us know, if you'd like to have some home evaluations run that would be more detailed than just running the computer generated thing that you see online everywhere. Even though we do have that down in the link. So guys, if you have any questions at all, reach out to us, 480-788-8569. You can always check us out at mincolahomes.com, mincolagroup.com, or email us at home@mincolagroup.com. Guys, hope to see you next time. Thanks a lot for joining us, and have a great rest of your week. Thanks.